Hello students, today we will discuss one more example in that one unit is let out and another unit is self-occupied. In this situation, how to calculate income from house property. So here X owns a residential house property. It has two equal residential unit. Equal means here it is important word because equal means both the unit is divided into 50 percentage. Now, unit 1 and unit 2 are the two units. While unit 1 is self-occupied by X for his residential purpose. Unit 2 is let out rent being 6,000 per month and rent of 2 month is could not be recovered. That means it is a unrealized rent. Municipal value of the property is 1,30,000. Standard rent is 1,25,000. Fair rent is 1,40,000. Municipal tax is imposed at 12% per person which is paid by X, that is paid by owner. Other expenses for the previous year 22-23 is repairs 250, insurance 600, interest on capital borrowed during 1998. So capital was borrowed in 1998 is 63,000. Find out the income of X for the assessment year 23-24 on the assumption that income of X from the other source is 1,80,000. Now, on the basis of this, you have to make the calculation. So first of all, we will make the calculation of self-occupied property. So gross annual value is nil because if property is self-occupied, you will not get any deduction. Municipal tax is also you will not get. Net annual value is nil. You will not get standard deduction also because if net annual value is nil, then how can you make the 30% of NAV? Only one deduction is available, that is interest on borrowed capital. And how to calculate that is interest on borrowed capital? So simple way, total interest on borrowed capital is 63,000. Now this 63,000 is divided into two parts because 50% house is self occupied and 50% is laid out. So 50% of is 31,500 and another is 31,500. But if property is self occupied, that means self occupied and loan is taken in 1998, then what is the maximum amount of deduction that person will get? That is 30,000 only because this is the limit. If it is after 1st April 1999, then 2 lakh is the limit. But if it is taken before 1999, 1st April 1999, then in that case interest is only 30,000. So that is why they have written one half of 63,000 or 30,000, whichever is lower. So 30,000 deduction is available. So in this case, income of unit 1 if property is self occupied is 30,000. Very simple way, you can make another column side by side and do the same calculation, or you can split out. Now we will do the income of let out for unit 2 because property unit 1 is self occupied and unit 2 is let out. Now how to make the calculation for the same? Now municipal valuation is, now every time you have to make the 50%. Why? Because municipal valuation you are is for full property, but it is only for 50%. Now 50% of 1,30,000 is 65,000. Then fair rent is how much? So fair rent is 1,40,000. If you make 50% of it, you will get 70,000. Then standard rent 1,25,000. You will make 50% of it, so you will get 62,500. Now from this two value, municipal value and fair rent, whichever is higher, that is 70,000. Now you have to compare 72,000 with SR 62,500. Now you have to take lower value, whichever is lower, that is 62,500. So that will become your answer for the step number 1. Reasonable expected rent of the property, MB or FR, whichever is higher, but subject to maximum of SR, that is 62,500. Now stand annual rent. Annual rent is how much? That is 6,000 multiplied by 12, that is 72,000. And unrealized rent is 12,000 because 2 months rent is not recovered. So that is why 6,000 multiplied by 2. If you make it, then you will get 12,000. So what is your step number 2? Step number 2 is annual amount computed, sorry, rent received or receivable after deducting unrealized rent but before adjusting loss due to vacancy. So your annual rent or actual rent is 72,000 minus 12,000 rent is not received from the tenant, that is unrealized rent, and all the conditions are satisfied. We are assuming that. Now, so if you deduct 12,000 from 72,000, you will get 60,000. Now, step 3, whichever is higher, step 1 or step 2. So higher value is first one. So 62,500 will become your answer. Now, loss due to vacancy. Loss due to vacancy is nil. So all, what is your gross annual value? That means your gross annual value is 62,500. Means step 62,500 में से nil minus करोगे, you will get the same answer. Now municipal tax. Total municipal tax is 12%. Just 12% is given and nothing more, no other information is provided. So how to find out municipal tax? First of all, find out whether municipal tax is paid, but because if it is payable, not deductible. If it is not paid by owner, then also not deductible. But here in question, it is very clearly mentioned that property is, municipal tax is paid by Mr. X, so that is why deduction is available. So what, how to find out? You have to make 12% of 1,30,000. And what is this 1,30,000? That is municipal valuation. So remember students, whenever municipal tax amount is not given and if percentage is given, then you have to make that percentage of municipal valuation. So 1,30,000 into 12% into 50%. Why you are making 50%? Because you are calculating for unit 2 which is laid out and it is only 50%. So your answer will come 7,800. Now if you deduct that from 62,500, you will get 54,700. That is your NAV, net annual value. Now from this you will get two deduction, standard deduction, that is 30% of 54,700, so 16,410, and interest on borrowed capital, total interest is 63,000, so 50% of 63,000 is 31,500. And if property is laid out, remember students, then irrespective of the amount, full amount is deductible. If it is 1 crore, 10 crore, whatever, full amount of interest is allowed as a deduction. So 31,500 is total amount of deduction that is available, because total 63,000, and first we have claim in self occupied and second is laid out. So what is your income from house property from unit 2? Unit 2, that is 6790. Now you have to find out total income. So first of all, you have to find out income from house property. Then unit 1, unit 2. Unit 1 is minus 30,000. Unit 2 is, now you have to make the total for this, and then income from other sources. It is 1,80,000. So you have to deduct 30,000 minus 6790, 23,210, and now this 23,000 is negative because greater amount is minus. Now this 1,80,000 minus 23,210, you have to deduct it 1,56,790. So this way you can do your calculation. If you have any doubt, you can write down in a comment box, so I will try to make reply for the same. Now last example, X owns a property at Delhi. Now one more example that we are going to discuss. X owns a property in Delhi. Municipal valuation is 1,64,000. Fair rent is 2,16,000. Standard rent is 1,80,000. The house is laid out up to January 31, 2023. Monthly rent rupees 14,000. From February 1, 2023, the property is self-occupied for own residential purpose. Now, what is the situation? For some part of the year it is let out and another part of the year it is self-occupied. Expense incurred like municipal tax 6,000 actually paid, repairs 2,100, insurance, interest on capital borrowed, date of borrowing is 1991, for acquiring the property 1,23,000. Assuming that the income of X from other source is 1,86,000, find out the net income of X for the assessment year 23-24. Does it make any difference if the property is let out up to January 31, 2023 at rupees 19,000 per month? There is no unrealized rent. So we have to make two calculations. If rent is rupees 14,000 per month and if rent is rupees 19,000 per month. So municipal valuation is here given 1,64,000, 2,16,000, 1,80,000. So you have to make higher one. Then you have to compare with SR. So 1,80,000. So first step answer is 1,80,000. Here also 1,80,000 will come. You know the step very well now. Reasonable expected rent of the property MV or FR, whichever is higher but subject to SR. ये दोनों में से हायर आएगा 2,16,000. नाउ यू हैव टू कंपेयर विद एसआर. आपको एसआर से बढ़ना नहीं चाहिए. सो दैट मींस your answer is 1,80,000. Now step 2, rent received or receivable after deducting unrealized rent but before adjusting loss due to vacancy. If rent is 14,000, so 14,000 multiplied by 10, because property is let out only for 10 months and from February and March it is self-occupied. So 14,000 multiplied by 10, 1,14,000, and if let out for 19,000, then 19,000 multiplied by 10, so 1,90,000. So now amount computed in step number 1 and step number 2, whichever is higher. So step 1, in first situation step 1 is higher, in second situation step 2 is higher. So that will become answer for step number 3. Loss due to vacancy is not given. So your gross annual value GAV is 1,80,000 and 1,90,000. Now municipal tax is actually paid, an amount is given. Here you can find out municipal tax is 6,000. So that 6,000 will be deducted in both the situation. So your NAV net annual value is 1,74,000 and 1,84,000. Now you have to deduction under section 24 standard deduction 30% of 1,74,000 and 1,84,000. So 52,200 and 55,200 in different situation. Now interest on capital borrowed is 1,23,000, and even though loan is taken in 1991, then also full amount of deduction is available because limit is applicable when property is self-occupied. If property is self-occupied, then in this situation only 30,000 is available as a deduction. But here 30,000 is not available as a deduction. Full amount is available as a deduction. Why? Reason is very simple, because property is laid out. So you don't have to consider, you don't have to think for the limit, because property is laid out. And if property is laid out, then 1,23,000, 1,23,000 full amount of deduction is available. Now interest income from house property 1,200 minus, and here 5,800. So and other income is 1,86,000 in both the situation. So what is your net income in first situation? 1,84,800 and 1,91,800. So this way you can find out if property is laid out for the part of the year and self-occupied for another part of the year. And in this case you can do the calculation like this way. Thank you very much. If you have any doubt related to this, you can ask in a comment box. I will try to make reply for the same. Have a nice day. Bye.